Hello everyone, I'm Money Zen. Why do insurance companies make so much money? Because people aren't as afraid of death itself, but of the process of waiting for death. When you get sick and suddenly realize you have no money in your wallet, you're left with no choice but to wait for death. And that waiting process is way more terrifying than death itself. What's even more terrifying is that when you die, you might also implicate your family, because you're the one who is responsible for making money for the household. Don't talk about death, even just getting laid off. Your income stops the moment you stop working. Your family has to pay off your mortgage, car loan, and take care of your kids' expenses. That's when an insurance company comes, like an angel from the heaven. They tell you, we can help with the money, you just need to focus on getting better. So you can see, even the richest people in the world, they bought a lot of insurance. It's not because they're afraid they won't have money if they get sick. It's because they're afraid of losing what they already have. That's human nature. And honestly, insurance is a pretty good deal. You use a small amount of money to leverage a huge potential return. Even if nothing ever happens, from a risk allocation perspective, you still come out ahead. But the premise is that you have to buy the right insurance, because the reality is most people spend a lot of money on insurance they don't even need, or they pay the money, but when something actually happens, they don't get any compensation. In the end, what we see is that a lot of people end up blaming the insurance agents. Say, these agents will betray even their own friends and family just for performance, just for money. Honestly, I completely agree. There really are a ton of unethical agents out there. But I tend to believe that there's a reason behind these miserable people. Could you avoid these traps? The key is, do you have the knowledge and awareness? Or do you have someone knowledgeable around you to warn you? If you don't have either, isn't that actually your own problem? What determines whether a person succeeds in life is realizing that every problem is your own problem. So today's video is another video that's a lot of work and will probably offend a lot of people. First, I'm going to expose how to avoid common tricks and traps used by unethical insurance agents. Then, I strongly suggest you watch till the end, because later I'm going to openly reveal exactly how much insurance I personally buy and what kinds I buy. I'm going to offend insurance companies, agents, and some people who disagree with my views. But I just want to share, from the perspective of a businessman, how I personally avoid the traps in insurance and how I use leverage to ensure my wealth. So brothers and sisters who support me, please hit the like button to back me up. And let me emphasize it again. This channel is dedicated to raising bosses, entrepreneurs, and wealthy people. If you really don't want to miss this kind of information anymore, connect with me, subscribe, and hit the little bell. First, do you want to buy insurance a little cheaper? If yes, think about this. What if an agent says to you, come work at our company. That way you can buy the insurance for yourself, and you can have the commission on your own, so that you can have the insurance, learn some insurance knowledge, and pocket the commission, and even earn extra money on the side when friends want to buy through you. Isn't that really great? And what's the most important? This compulsive trick is basically legal, because for the insurance company, they have to pay that commission anyway. Whether it goes to you or to another agent makes no difference. Because of this, lots of people become insurance agents. My friends joined the insurance industry for exactly this reason. Back when I had nothing, I had a friend I trusted around me. He was honest, had saving habits, a bit ingenious. When I found out he became an agent, I bought my very first policy from him. But a year later, he quit, and we never contacted anymore. My policy got transferred to some colleague of his I didn't even know. The problem is, I know that he only joined to get the commission on his own insurance too. He actually never planned to do insurance long term either. And the scariest part, this is not an exception. I have a friend who's a senior executive at an insurance company. He told me a statistic. Keep this between us. 3 years ago, more than 300 people joined his team as agents. 3 years later, these 300 people have only 2 remaining. Then I asked him, why those 2 stayed? The reason is simple. Only these 2's performance are incredible, so that they can survive. Most people quit after a few days or a few months. Why? First, you gotta know, for an excellent agent, selling insurance is not their main power. Recruitment is the main mission. What does it mean? Recruitment means bringing more people into their team. That's the game insurance companies designed. When they hire agents, they are actually hiring future customers. Because when a new agent enters the insurance company, they will suggest you to make a list and write 100 names of your potential clients. Then, what you need to do is to turn these potential clients in your list into real paying clients. Typically, newcomers to the industry, if they haven't deliberately built a wide network, like go to a wine party or any other social gathering, etc., then their very first customers will almost always be themselves or their relatives, friends. Assume I'm the insurance company. For me, I need to compete with other peers in the industry. If you can buy your and your whole family's insurance from my place, that basically means I've already won against my peers. If you can actually sell to strangers on top of that, I would treat you as a treasure, because these things to me are a bonus. Sounds like insurance companies are evil. Their product is literally just a piece of paper, a contract. But the reason insurance has existed till now, and even the world's richest people would buy, is because it actually works. It runs entirely on the law of large numbers and the probability. But it genuinely allows us to use leverage to protect our wealth. That's why companies use these aggressive tactics to grab market share. Because if you don't buy it from us, you'll buy it from the guy next door. This is also why most people quit after a short time. Because at first, the people around you are willing to support you. Your performance must be good. But what about all the people around you who have already bought insurance from you? So here's my personal principle. When choosing an agent, first, I think it's totally fine to earn money from the people around you. Because it's not like earn money from you and not giving you the service. That's called scam. But business is business. He earned from me today. I'll earn money from him tomorrow. That's just how business works. So I don't think you have to cut ties with your relatives just because you're selling insurance. Like, for now, when I buy insurance, I also go to my friends. He did make money from me, but is there anything wrong? I have to buy anyway. Why would I let a stranger earn it? Of course, I let my friend earn it. For example, when my company launches a new product, I also ask my friends to support me. When a celebrity friend makes a movie, their friends buy out entire screenings. Same logic. Relationships are money. But before you buy the insurance, you gotta figure out your friend. Does he plan to build a long-term career in the insurance industry? Earning my money is fine, but can he earn money from strangers too? Does he have the ability and the intention? If no, he's only planning to make money from people he already knows, then I won't buy a single product from him. Insurance is fundamentally a sales industry. Sales is about being outward facing. You gotta know how to sell products to strangers. That's the real point. I always recommend people who have nothing to start in sales. If you want to start a business today, no matter how good your product is, if you can't sell it, then what kind of business are you starting? Today, you go to work as an ordinary office worker, working from dawn to dusk, hoping to achieve financial freedom. But 5 years passed, 10 years passed. Is it possible? From ancient times until today, almost everyone who got rich, no matter what industry they're in, essentially they were masters of sales. Even Buffett, Bill Gates, they stand in front of you just to sell themselves. So you would buy their funds or their Windows software. Here's another problem. A lot of people buy insurance, but end up not getting a single dollar when they file a claim. Why does this happen? Because in most cases, the agents are our relative or close friend. When it comes to telling them how much my family earns or what illnesses I have, most of us feel embarrassed. It's private. This leads to incomplete or inaccurate health disclosure when you fill out the application. What does that mean? On every insurance application, there are many health questions. Have you been hospitalized in the past few years? Have you had any checkups? Is this body part normal? Is that body part normal? Many people think as long as I wasn't hospitalized in the past few years, I don't need to answer. These are all small issues. The doctor even said it's nothing. That's actually the crucial point. Insurance is not something you spend money on, so the company must pay you no matter what. Everyone, please remember, hospitals and insurance companies have completely different definitions of healthy. A hospital only cares whether you have a problem right now, but insurance companies will look at the same symptom to consider over the next few decades. Does this raise the chance you'll get a certain disease? Put it more simply, if you never had certain disease before, your premium is cheaper. If you do disclose it, you've had certain disease. then your premium might go up, even refuse to insure you. So when it's time to claim, the insurance company discovers you didn't disclose and you used the cheaper price to buy. Then the legal responsibility is on you. They can even void the entire policy. At that point, a lot of people immediately blame the agent. This is also true. Some agents on the market only care about their performance. Their mission is to sell insurance, but for them, their monthly performance targets are strictly fixed. If he doesn't hit his targets, they might miss out on his bonus or even their base salary. So, closing the deal is their number one priority. If he tells the insurance company about your health issues, first, it drags out the whole process, and second, there's a huge chance the deal won't go through. Then all that effort he put into this sale might just go down the drain. So, looking at it from their perspective, they aren't exactly keen on walking the clients through these health disclosures. But the truth is, they do have a responsibility to tell the client to make a clear health disclosure. But think about it, if you end up in court, it's really hard to prove whether he told you or not, unless he explicitly wrote it down, telling you to ignore that part. Otherwise, without it in black and white, if you say he didn't tell you, or even that he told you to skip it, and he claims he did tell you, it's just your word against his, and you're the one who loses out. So, it's actually really simple. After watching this video today, before you sign any insurance papers, check if your agent clearly explains the health disclosure to you. If they do, they're genuinely looking out for you. They are one of the good ones. You can keep trusting them. If not, well, now you know where you stand. You know the quality of this agent, and you can decide if you really want to buy from them. Actually, insurance agents have plenty of other sales traps, like bundling products, telling you about new arrivals or exclusive offers, and so on. Honestly, looking at it from a businessman's perspective, these things don't matter that much, because the main goal of that stuff is just to speed up the deal. Sometimes we all need a little push to buy something. That's the greatest part of sales. But the key is still, is the product they're selling actually right for me? Can I afford the payments? And most importantly, after I pay, will I actually get the payout if I need it? It's just like buying a house. As a professional investor, I ask myself, what location am I buying in? What price is considered a bargain? Will there be someone to take it off my hands in 3 to 5 years? Am I buying this place for rental income or capital appreciation? How much do I expect to make? These are questions I need to think about. That's my responsibility. I'm not going to ask the agent, because the agent's job is really just to match me with a house based on my requirements, and then help me negotiate the price. That's it. Besides, I generally don't trust the agent's opinion. They might not even be able to afford a house themselves, or haven't made money from real estate. So why should I listen to them? Unless you tell me you've made more money in real estate than I have, and that you're a pro investor yourself. I do have friends like that. By the same logic, you should have a clear idea of what insurance you need before you contact an agent. Do not wait until you meet them to figure it out. So now I'm going to reveal my own strategy for buying insurance. Disclaimer first, I am not an insurance agent and I have no financial ties to any insurance company. Now, here's the real question. Have you actually thought about it? How much are you willing to pay for insurance? The money you pay is called the premium. And if something happens to you, how much compensation do you want to get? The money you receive is called the coverage amount. The higher the premium you pay, the higher the coverage you get. Some people don't even know these. So the question is, how much is enough? There's a concept everyone needs to be clear on. Cancer treatment nowadays is incredibly expensive. With advances in medical technology, many critical illnesses are gradually turning into chronic conditions. And how do you keep a condition chronic? By taking medication long-term. And do you know what taking medication long-term means? It means spending money long-term. Spending $80,000 to $100,000 US a year just on one medication to turn a critical illness into a chronic one and keep you living in a state similar to a normal person. That is a massive expense. So we need insurance with enough leverage, but at the same time, it shouldn't be a heavy burden on our finances. Now, here comes the most valuable part, because I'm going to openly share how I spend the least amount of money to get the maximum amount of coverage. Let's start with the first type, life insurance. Basically, if you pass away, they pay money to your family. Think of it this way. Imagine you're doing business. There's a 90% chance you make 100 million, but a 10% chance you make zero or even lose money. But if you're willing to pay 1 million out of that 100 million, you are 100% guaranteed to get that 100 million. Would you be willing to pay that 1 million? Life insurance works on the exact same logic, right? You have a 90% chance of living a long, healthy life. But for that remaining 10% risk, meaning if something actually happens, what happens to the rest of your family? If you are the breadwinner and everyone relies on you, elderly parents above, young children below, and your spouse in the middle, how do you guarantee their living? Shouldn't you transfer 100% of this risk to the insurance company? A lot of people say, I have plenty of assets. I have a house. They can just sell the house to survive. But let me ask you, is it really necessary to make them sell the house when you could clearly just spend a few $100s a year in premiums to buy a term life policy with about $1 million in coverage? Why would you force your parents to sell the house if you're gone? Many people are speechless when they hear this. They aren't shocked by what life insurance does. They're shocked by the price deal done for just a few $100. Exactly, because the probability of dying is low. The premium you pay is actually very cheap, but if it happens, the money the insurance company pays out is huge. The more it has these characteristics, the more it fits the true essence of insurance. But precisely because it's cheap, many insurance agents won't recommend it to you, because the commission they get isn't even enough to buy you a meal. I mainly want to talk about how much coverage to buy. What do you think about this? It's simple. Just think, if one day you're not in this world, how many years do you want the insurance company to support your family? I specifically asked a senior insurance executive. He said, if your annual income is $50,000, buy $500,000 in coverage, which is 10 times your annual income. This 10 times income should be enough for your family to live for a few years. These few years act as a buffer period, letting your family recover and find other ways to make money. But why is 10 times the annual income only enough for a few years? Because our money depreciates. By that time, the money won't be worth as much as you imagine. Besides annual income, my own life insurance considers one more factor: the money we owe the bank. For example, if you only earn $50,000, but your mortgage is $1 million, if you only buy the $500,000 coverage I just mentioned, that's definitely not enough. You need to add the difference of your mortgage. At the very least, you have to guarantee that if something happens to the person, the house won't be taken by the bank. So the coverage should ideally be higher than the mortgage, plus a portion for living expenses. In that case, it will exceed 10 times the income. Now, my own cash flow is sufficient. The cash I have in the bank is definitely enough to pay off the mortgage and feed my family. But I looked into it. When accident happens on you, the cash in the bank gets temporarily frozen and you can't pay the mortgage then. So having cash flow is useless. Therefore, your term life coverage should ideally be greater than your mortgage. Otherwise, you might have to sell gold bars. Then, the second type is medical insurance. Like I said, life insurance is for when you kick the bucket and then they pay you. But suppose you get a critical illness, but not serious to die. You have to bear the cost of hospitalization and medicine, etc. That's when you buy medical insurance. Very simple. For an average person, you can easily buy $300,000 or $400,000 in coverage, because the premium for $400,000 might only be a few dozen dollars higher than for $300,000. This insurance isn't expensive at all, and a $300,000 to $400,000 should be barely enough to treat a serious illness for now. However, even though this insurance is cheap, it's actually not enough. Right, the medical costs might be mostly reimbursed. But suppose you are the only income earner in the family, and you don't work for over a year because you need to rest for a long time. Then we're back to the same problem. What about your family's living expenses? The kids' education, the mortgage and auto loans. You can see, even though medical insurance solves the medical bills, the family's financial situation still collapses. That is when critical illness insurance comes into play. Suppose you get sick. It directly pays you a large sum of money all at once. You can use it however you want to get through this difficult time. So, critical illness insurance, also very simple. we can judge it based on income. 2, you can understand critical illness insurance as something to compensate for your loss of income after you get sick. So you can think about the time frame. Generally, if you get a critical illness, you probably can't work for 2 or 3 years, right? 1 or 2 years for treatment, 2 or 3 years for recovery, right? So for critical illness insurance, I believe the base coverage should be designed to be at least 3 times your annual income. I don't think you need to worry too much about inflation here. It's just 3 or 4 years. The inflation rate is acceptable, meaning if you have an annual income of $50,000, you can buy coverage of around $150,000. And that's okay. And for me personally, I only buy these 3 types of insurance. But I still want to emphasize this because some people might ask, why isn't the insurance I bought as cheap as you said it would be? Because you probably bought insurance with cash value. Simply put, the premiums you pay can be taken back in the future, and they even give you interest. So this is insurance with a savings component. You can think of buying this type of insurance as forced savings. This is the most popular type of insurance in the world. Because it has a savings feature, it means the premiums you pay are higher, and that means the insurance agent's commission is higher. That's why they love recommending these products to you. But from a businessman's perspective, I think this type of products have strayed from the true principle of insurance. I don't need to rely on insurance to make money. So generally, I don't recommend buying them. Of course, if you have spare money, it doesn't matter if you buy it or not. But if your cash isn't exactly spare, I suggest you focus on preparing for your kids instead. Kids actually don't have income loss because if they get a critical illness, they don't have any income at all. So naturally, there's no loss. So when insuring children, the question you need to think about is, are we going to treat this? I suggest that unless you've reached a point where you never worry about money, you still need to buy a critical illness policy for your child. For minor illnesses, it's fine. You have a job. Life just gets a bit tougher. But what about a major illness? Just a few days ago, a friend of mine borrowed tens of thousands of dollars from me because his kid was hospitalized with a bacterial infection, probably just from playing in the park, touching things, and then biting their fingers. Now, my friend is just a regular office worker, but seeing blood in his child's stool, then fever, then suffering. He just couldn't take it. So the attitude towards a sick child is different from a sick adult. If you get sick, you might actually debate whether to get treated, but your child is different. That's your baby. You want to give him the best. Even if it bankrupts you, you'll probably go through with the treatment. Now, I'm not a parent yet, so I might not fully understand that feeling. But I do know that there are some common diseases now, like leukemia and so on. These actually have high cure rates, but they require spending money for a long time. So, if you want to be able to handle the treatment calmly, you need to prepare for your child's term critical illness insurance in advance. After hearing all this, you might feel that adding all this up takes a huge part of your budget. But in the eyes of us businessmen, it's not really an expense we even need to think about. For example, I mentioned coverage should be 10 times your annual salary. But suppose my annual salary is 10 million. I don't need to buy 100 million in coverage. Because even if I don't work, my family's lifestyle won't be affected much. I'm not being arrogant. Once you earn your first pot of gold, your first $1 million, making more money doesn't really feel like anything anymore. Because basically, there are no barriers for most things anymore. You can buy whatever you want. So, the money I spend on insurance is actually about the same as what a regular office worker spends. Because I'd rather spend more money on investments, letting money grow my assets, or investing in my own brain, investing in my network, spending money to get into circles of people smarter than me, and then doing bigger business with them. So, you'll notice, why does this channel try every possible way to help everyone achieve financial freedom? Because the world is like a door. If you push this door open, you and your next few generations will live very easily. If you can't push it open, you'll just keep cycling between worry and suffering. And I believe entrepreneurship is the only righteous key to open this door. Because I and the many students I've helped have already done it. But some people will say starting a business is hard and the failure rate is high. Plus, I never went to business school. That's because they don't have an internet mindset yet. and because they don't know how to make customers chase them. In the world of self-media, you can build your own brand anytime, anywhere. You no longer need to stock inventory, hire employees, rent a shop, and so on. You just need a mobile phone and a computer, and you can own a one-person company. And the money you make can be several times more than those bosses running chain stores. Because you are facing a global customer base, while they can only accommodate the customers that fit in one shop. And most importantly, you don't need a lot of startup capital. In other words, you have nothing to lose. Of course, your biggest cost is your own time. Alright, feel free to leave a comment down below, as long as you can find 1 or 2 useful sentences in today's content that can help you live a better life. I'll be completely satisfied. Alright, I'll continue sharing tips on how to become wealthy, how to be an entrepreneur, an investor, and achieving financial freedom every Sunday at 8:30 p.m. If you don't want to miss out, make sure to subscribe to my channel and click the little bell and generously share this video. I sincerely wish all of you who like this video will reach financial freedom soon. Alright, I'll see you next week. Bye!